All right. Well, welcome everyone. Thank you so much for joining us as we start the second installment in Unchained Capital's Retirement and Inheritance webinar series. The goal of this series is to provide you with consistent education on how to think through establishing a wealth plan for your retirement assets and really your broader personal wealth as we enter a hyper-Bitcoinized world. Now, as I said, this is the second installment in the series. Jeff and I last month spoke on the Unchained IRA in detail. And if you are interested in our Bitcoin IRA product, I definitely encourage you to check out that webinar on our YouTube channel. There will be a live chat included, or there will be a link included in the live chat as well. My name is Connor Dolan. I am a director of client solutions here at Unchained Capital, and I work really closely with the IRA team. I am lucky enough to be joined once again by Jeff Vandrew, who is our head of retirement and inheritance at Unchained Capital. And internally, some refer to him as the godfather of the Bitcoin IRA. Jeff, how are you doing today, sir?
Thank you very much. I appreciate the kind words, and it's great to be here.
Excellent. Well, we're really excited to have you. I know a lot of people are really interested in hearing your opinion on this topic specifically. Today, Jeff is going to be walking through the McNulty case with us, which is a recent legal decision that has made waves within the Bitcoin IRA community. We'll learn more about why that is here in a little bit. Before we get started, a few housekeeping items. This is a live webinar, and it is being recorded, and there will be a replay available on our YouTube channel following, maybe within the next week or so. As you may notice, we are using a new platform. This platform is really cool. We're really excited about it. Some things to be mindful of. You have the ability actually to download this presentation within this platform if you'd like to keep it for your personal reference. We also have some polls that we're going to be throwing out throughout the discussion, and certainly would love your participation there. There's the ability to react at the bottom of the page here if there are certain points that you're really interested in, or if you disagree really strongly with Jeff, please let him know. Most importantly, we will have a Q&A at the end here, and that's always a really popular opportunity to ask Jeff and myself any questions on the Unchained IRA and, of course, the McNulty case. So if you are interested in asking questions, there is a box in the bottom right, which you can submit your questions to. So with that, let's just jump right into the discussion today. To briefly go over the agenda, we will be spending a majority of this time discussing the McNulty case and the opinion. But I do want to take a moment to introduce Unchained Capital's platform more broadly. I'll speak very quickly to the Unchained IRA as well and answer a few FAQs. For anyone who is not familiar with what we do at Unchained Capital or is interested in learning more about the Unchained IRA, once again, as a quick reminder, if you are interested in doing a deep dive into the Unchained IRA, I'd encourage you to check out the webinar we did last month, located on our YouTube page. Then we'll get into the meat and potatoes of the discussion today, and Jeff's going to walk through the McNulty case. We'll talk through what that opinion said, how it could potentially impact Bitcoin IRAs. And then Jeff is also going to walk through the difference between a checkbook IRA and the Unchained IRA. The importance of that being the checkbook IRA is the legal structure in question within the McNulty case. And then once again, of course, everyone's favorite section, the Q&A. So with that, thanks again for joining us. Really looking forward to the discussion today, and let's jump right into it. So for those who may not be familiar with Unchained Capital, we are based out of Austin, Texas. We were founded in late 2016, and Unchained Capital is the world's premier Bitcoin-only financial services company. And our mission on a day-to-day basis is empowering individuals to custody their own Bitcoin and hold their own private keys. And our platform allows them to do that while managing all of your Bitcoin wealth in a single place. If we think about Bitcoin, without getting too deep into the weeds here, this importance of self-custody and the focus of Unchained Capital. Bitcoin, one of the most important components of it is the fact that you can actually custody it yourself. For the first time really in human history, we have the ability to be our own bank in a way that we never could previously. We don't have to rely on a third party to custody our wealth for us. It's really akin to holding a bar of gold or a bag of cash. It's final settlement. Bitcoin is this unbelievable digital bearer asset, and it gives you the ability to custody your own wealth, but in a much more scalable or transmissible way than holding a bar of gold or a bag of cash. Without getting too deep into the technical weeds, Bitcoin lives on addresses, and every address has a unique private key associated with it. The most important takeaway from a Bitcoin security perspective is whoever holds that private key ultimately has the ultimate control of that Bitcoin. They are the one that has access to that Bitcoin, and they can control where it goes or who has access to it. Most individuals start their Bitcoin journey by buying Bitcoin on an exchange. In this scenario, there is still an address and there is still a private key. The only difference is that the exchange, whether it's Coinbase or Gemini or take your pick, they are the ones holding the private key. And if, as the phrase goes in the space, not your keys, not your coins. We could spend an entire hour talking about the importance of why you should be holding your own private keys. We are reminded every day of why that is. You see news stories all the time about exchange hacks, about accounts being hacked, about accounts being frozen. Take a look at the news stories around the world. It's not hard to see governments imposing financial restrictions on their citizens around the world. All of these different reasons, Bitcoin allows you to be your own bank. And if you're not holding your own private key, well, you're not taking advantage of arguably Bitcoin's most important attribute. So what we do at Unchained Capital is we teach people and we help people hold their own private keys. But we do so in a really unique and clever way that ultimately we believe is the superior security solution for 99% of individuals out there. What we do is help clients build addresses with multiple keys associated with them. More specifically, we are building 2 of 3 multi-signature addresses. And the idea is that it is an address with 3 private keys associated with it. And you need any 2 of those 3 private keys in order to access the Bitcoin. There's a diagram on the screen here that you can see as a visual representation. Another way to think about it is a safety deposit box with 3 unique keys and 3 keyholes. And you need any 2 of those 3 keys in order to open that safety deposit box. In that scenario, we are the banker. We only have 1 key. We don't have the ability to open your vault on our own or access your Bitcoin, and we cannot prevent you from doing so. Unlike an actual physical bank, we can't actually drill into your vault. So there's one difference there. But importantly, and most importantly, you hold 2 keys. You have unilateral control of your Bitcoin and you can access it at any time. You can even access your Bitcoin in a doomsday scenario where our website is down or Unchained Capital disappears off the face of the earth. Not like that will ever happen, but you still have the ability to access your Bitcoin even if that were to be the case. And so this structure that we call collaborative custody allows you with these devices are ultimately what allows you to store your own key. Using 2 of these devices and their seed phrases or their backup phrases, as some people refer to them as, you have 2 keys and we have 1. You have unilateral access to your Bitcoin, but you're not on an island. You have someone walking you through this process, helping you get set up with holding your own keys, answering any questions you may have, and also sharing the responsibility of securing your Bitcoin. So in short, Unchained Capital gives you the ability in this 2 of 3 setup to be the only person in the world that has access to your Bitcoin, but you're not on an island. And what's really cool is that once you're set up in this scenario with 2 keys and their seed phrases, you can manage all of your Bitcoin wealth on our platform in a single place. So you can build one of those 2 of 3 safety deposit boxes for all of the personal Bitcoin that maybe is sitting on an exchange right now. And then you can create a separate 2 of 3 vault, which is what we refer to these addresses as. You can build a separate 2 of 3 vault for Bitcoin, maybe your business or your trust owns. And then importantly, you could also set up a vault for IRA funds as well. and that's the Unchained IRA. So the Unchained IRA is a product that we have rolled out that allows you to hold real Bitcoin in an IRA that you are actually holding the keys to. And as a quick review of the rollover process, ultimately, if you sign up for the Unchained IRA and you go through our onboarding process, we will work to set up a new IRA account for you at Solera National Bank, who's our IRA custodial provider. We'll set up a new vault for you on behalf of that IRA account. And then once those are set up, you can fund your IRA either by making an annual contribution or rolling over from another IRA or an old 401k. So that's a quick overview of the Unchained IRA, and I will answer a few quick FAQs that we constantly get asked. But once again, the focus of this discussion will really be on the McNulty case. And the webinar is a great opportunity to learn more about the Unchained IRA. And of course, I am happy to set up time to speak with any of you if you are interested in learning more. So in regards to some frequently asked questions on the Unchained IRA, since we get a lot of them, one of the questions we get a lot is in regards to timing of the rollover process. This is a really tough question to answer because a lot of it is contingent on how quickly you are to take action, as well as how quickly your custodian actually takes action and processes the transfer request. On average, though, we see clients going through the onboarding process in roughly 2 to 3 weeks from the point that you actually fill out the IRA order form to the Bitcoin to being deposited into your vault. Importantly, though, one of the most important questions of that is how long will I actually be out of the market? So even though the entire process takes roughly 2 to 3 weeks, there is a period of time where we need to set up those accounts up front. Once your IRA account is set up and your vault is built, then we can actually accept your funds. We can accept the transfer. That's when you would process the transfer request. And once again, a lot of this is contingent on how quickly your current custodian is to move. But we see most clients are actually out of the market somewhere in the 7 to 10 day range, even though the entire rollover process may take 2 to 3 weeks. A question we get a lot is in regards to backdoor contributions or backdoor conversions. Jeff Vandrew wrote a really good blog post on this. If you are interested in doing a backdoor contribution, we do have a lot of clients interested in and executing that process at Unchained Capital. Importantly here, you can do that. What you would want to do is execute that backdoor contribution or conversion at a discount broker where you can set up those IRA accounts at no charge and do that conversion at no charge, and then set up one Roth IRA at Unchained Capital. The end result of this being after the backdoor contribution, your funds are sitting in a Roth IRA account at a discount broker. You set up a Roth IRA with Unchained Capital, and then you would do a Roth to Roth rollover into your Unchained IRA. Last question here, can I time my Bitcoin purchase as part of the rollover? So once you start the IRA onboarding process and we get your accounts set up, there's no requirement that you fund that account or initiate a transfer at any time. You get the option as to when you want to initiate the transfer. Once that transfer has been initiated and those funds are in motion, then the process is completely automated. The funds are sent to Solera National Bank. As soon as those funds settle, we will place a purchase for you the following business day, and those funds will be deposited into your vault. So, as I said, I wanted to take a moment to answer some frequently asked questions on the Unchained IRA because we do have so much interest. The focus of this discussion, though, will really be on the McNulty case. If you are interested in learning more about the Unchained IRA, I definitely encourage you to take a look at our website. You have the option to start an order and begin the onboarding process there, or you can also set up time with our team to ask any additional questions. If we have time at the end, we'll certainly allow for questions as well there. And as Justine is sharing on the screen, if you are interested in checking out that website, you can click the link right on the screen to get started and pop over there. So with that being said, now we'll get into, as I said, the meat and potatoes of the discussion today, and we'll jump into all things McNulty. So I'm excited to bring back into the conversation Jeff. He's going to be doing a deep dive into the McNulty case today. And Jeff, maybe before we get started on McNulty specifically, we could maybe take a moment to just walk through the IRA legal landscape more broadly.
Thanks, Connor. Yeah, I think that's useful in this case because so the McNulty case is in essence a really sort of deep dive into the IRA statute, which itself is it's unusual in that it's really important to have historical context to understand why the way it's written, why the way it is written as it is. Excuse me. So IRC 408A, which is the very beginning of the IRA statute, it presumes that most IRAs are going to be structured as trusts. This seems weird to us today because in practice, this is exceedingly rare. I would say probably less than 0.1% of IRAs are actually structured as trusts. Nearly all existing IRAs rely on a later provision in the statute, 408H, which sort of eliminates the trust requirement if the IRA custodian instead sets up a custodial account. So that sort of raises the question as to why is the IRA statute written in this unusual way that it sort of presumes that most IRAs would be trusts. Well, it's very important to understand that the IRA statute is very old and it was written in a time where the investment landscape is very different from what we see today. So the IRA statute goes back to 1974. In 1974, this may seem strange to our younger listeners who didn't live like I did before the internet era. But in 1974, it was very strange for a regular average person to just sort of handle their own investments, to trade stocks, bonds. ETFs didn't exist yet. Mutual funds existed, but they were very rare. Those didn't even really take off until the 1990s. That's just not really how things worked. And even if you were a person who was one of the rare people who was involved in the market, you had to call your broker on the telephone, tell him what you wanted to buy and what price you were willing to pay. And that got relayed to an actual stock trading floor. Electronic trading was very new. It was only done for like sort of weird stocks. Major companies weren't being traded electronically. To give you an idea of what this was like, I mean, I remember stock prices not even being quoted in dollars and cents. They were quoted in eighths of a dollar. That's how different this was back then. So there was nothing like what we're used to today where we're hopping online in our IRA and we're buying, we're selling. We just have all this like type of control that we're used to. In that era, just to give you some background on how employer-based retirement plans worked. Today, with a defined contribution retirement plan, which we would think of today as a 401k, in that era, it wasn't necessarily a 401k. Even though your options are limited, you still have options regarding how to allocate your assets within your 401k. In 1974, that would have been very, very weird. The norm back then was that the plan trustee would have actually been choosing your investments for you. So the idea when the IRA statute was enacted was they kind of wanted to springboard off the way that employer-based retirement plans worked. And again, they weren't even contemplating the idea that average people in saving for their retirement were actually going to choose which securities they were going to invest in. That would have seemed crazy. So the presumption was that you would go to, a reputable bank, you'd open an IRA there, and the bank would set up a trust for you. And the bank would sort of have a fiduciary duty to invest your assets on your behalf. You weren't really going to be all that involved in how those investments worked. So that's how the statute is written. So 408H came about later, which said like, hey, if you want to do this as more of a custodial arrangement rather than a trust, we'll accept that. The big difference between a custodial arrangement and a trust is the custodian on a custodial account has a far lower degree of duties than a trustee of a trust does. So typically the trustee of a trust is he has a strict fiduciary duty to the trust beneficiary to act in that beneficiary's best interest. And he also has duties regarding diversifying assets, not taking excessive amounts of risk, things of that nature. So most people today in their IRAs don't want an IRA where some third party is that much in control of the investment. And that's where this sort of custodial account idea came in. So in a lot of the case law, we're not even case law, but a lot of statutory provisions that are getting interpreted by the McNulty court. You have to remember that the statute itself never contemplated that average investors would be choosing all their own investments, which puts us in a weird spot because nearly all IRA owners do so today.
Yeah, that's really that's enlightening, Jeff. You never fail to surprise me with how much you know about the nitty gritty on this stuff. So that's interesting. How does that then tie into the McNulty case from a transparency and custody perspective?
Yeah. So on that note, I think it's kind of important to determine what the taxpayer was Mrs. McNulty. It's why the case is called McNulty. Where it talked about what Mrs. McNulty did and how she structured her investments within her IRA. So Mrs. McNulty had a checkbook IRA. For those that are not familiar with that term, a checkbook IRA is one where the IRA account only owns one singular asset, and that asset is normally an LLC. I set these up for many, many, many years myself for my clients. I typically used a trust instead of an LLC. I don't want to say I was the one that pioneered that, but on some level, I popularized it. I wasn't the first guy to have that idea. But either way, regardless of whether it's a trust or an LLC, it sort of works in the same way. We're going to talk about an LLC in the context of this case because that's what Mrs. McNulty was using. So her IRA, it invested 100% of its assets into this LLC. Mrs. McNulty herself was a manager of the LLC. As manager of the LLC, the LLC used that investment to acquire American Eagle coins. Those are gold coins issued by the United States government. You might see them advertised on TV. If you watch a lot of like daytime news channels, they push them a lot. So Mrs. McNulty acquired them on behalf of the LLC, stored them in the personal safe in her home. She did put a little piece of paper or like a tag somehow on the coins that said that, these coins are property of the LLC. So the problem with this arrangement is precious metals have their own special statute, and that's Section 408M of the Internal Revenue Code that creates really special requirements for precious metals held in an IRA that are not applicable to other IRA assets. At issue here is the requirement under 408M that all precious metals have to be in the physical possession of either a bank, a trust company, some other entity regulated by a State Department of Banking, or an entity with a special licensing from the IRS. So she clearly violated 408M. She was always going to lose this case. That's not really what makes the case interesting. What makes the case, if that was it, we could just stop there at Unchained. We don't do gold IRAs. This would have nothing to do with us, and that would be the end of the story. What makes the case interesting are the grounds on which Mrs. McNulty lost, because what happened here was the court did not just say, Mrs. McNulty violated 408M, and as a result, her IRA is deemed distributed. They went further, and specifically, they went further and they invoked the custodial or quote unquote trust requirement of 408A that I was just explaining. What's very weird about that is the court seemed to treat trust and custodial account as synonyms. As I explained, that's just not the case in terms of how the real world works. If all custodial-based IRA accounts had to be treated as, trust-based IRA accounts, every IRA, for the most part, we see in existence, even some plain vanilla boring ones in the legacy financial system, would not qualify as IRAs under the statute. So that's very, very, very odd. The court further, they said explicitly that a qualified IRA custodian or trustee is required to be responsible for the management and disposition of property held in a self-directed IRA. That's just not true. That's just not an accurate statement. Even if that were the law, that is just not how almost any IRA that works today functions. I mean, if any of you out there just have a really basic legacy financial system IRA with Ameritrade or Fidelity or anybody else you can imagine, I mean, you know that is not at all how this is working. The custodian, TD Ameritrade doesn't pop in and monitor your investments for you and make sure you're not doing dumb decisions. If you want to make a withdrawal from your IRA, you click a button and the money just immediately, the ACH begins into your account. TD Ameritrade doesn't start asking you questions about, do you really need this money? A trustee would normally ask, what the money was being used for, et cetera. That's just not how these accounts work. So this was a very, very strange statement which the court made.
Yeah, and I think that kind of starts to touch on some aspects of the blog post you wrote, which once again, I will plug for everyone in the chat. Really good summary on the McNulty case and some of Jeff's thoughts. But within that piece, you do share some of your opinions in a very, kind of broad sense in terms of what your thoughts on why the court went, where the court went wrong. So maybe you can enlighten us on your thoughts on that front.
Sure, absolutely. So where did the court go wrong? Well, the idea that an IRA custodian, as I said, is responsible for the management of IRA assets, that's very strange in light of the way discount brokerage IRAs work in the legacy financial system. As I said there, discount brokers specifically in their custodial agreements disclaim any management of IRA assets. And the court even admitted that an IRA investing in a single member LLC was not a prohibited transaction. So a little background there. The reason checkbook IRAs took off, and the reason why when I was in private practice I did them for so many years, is the IRS challenged them very early on in a series of cases alleging that an IRA investing in a single member LLC where the IRA owner was manager was a prohibited transaction. The IRS lost those cases, and that's when checkbook IRAs really took off as a concept. All of us thought we were fine and we were in the clear. What was weird about this is the court said, yeah, that's not a prohibited transaction, but the LLC's existence is basically irrelevant if the manager is the IRA owner. And, in that case, it prevents the custodian from sort of fulfilling all these different sorts of management duties.
Yeah, that's interesting. And as we dive deeper into it, maybe I think we're going to have an opportunity to answer questions here in a second. So certainly, I guess at this point, just another plug. Certainly, feel free to put your questions in the question box in the bottom right, and we'll talk through them here shortly. Before we jump into the Q&A, though, or just at least take a pause here, Jeff, any last thoughts that you wanted to share in regards to just the McNulty case more broadly and the implications of it before we jump into some of the more Bitcoin IRA specific discussion?
No, I think we can take a couple questions here and then we'll sort of jump into, where the court got these ideas and how we can apply this in such a way to a Bitcoin IRA that we try and comply with the rationale of the McNulty court, sort of in the interest of conservatism, even though it really wasn't the best reasoned opinion.
Yep, absolutely. And as I see the questions coming through, we have a lot of questions here. Certainly appreciate the engagement. I see a lot of questions on the Unchained IRA. So we're going to focus on the McNulty case first, but if there is time at the end, we'll certainly, I'm happy to answer any questions there. Jeff, this might be putting the cart a little bit ahead of the horse here, but there's a lot of questions in the chat about people who are already in an investment trust of some sort or an LLC or a checkbook IRA type structure. Some of them had worked with you previously. There's obviously a lot of other providers out there. So I know we're about to jump into that discussion, but one of the biggest questions is, so for example, some clients have a investment trust, a checkbook IRA that's set up at Unchained Capital. The question from that client is, am I safe in this scenario?
I mean, under the strict interpretation of the McNulty opinion, you would not be. So the question is whether that the McNulty opinion is well reasoned enough that it would apply to assets other than gold. We just don't know. There's some uncertainty there, and for a more thorough sort of discussion of that topic and how it applies to you, I would suggest consulting with a tax attorney or a CPA. If you decide that you want to attempt to comply with the rationale of the McNulty opinion, at Unchained, we have a conversion process where you can convert your existing, checkbook style IRA into an Unchained IRA, which, as we are going to discuss later on during the presentation, is not a checkbook IRA and is a lot more compliant with the rationale proposed by the McNulty court.
Yep. Excellent. And then another question before we jump back into the conversation. It's less related to the McNulty case, but it's certainly an important one. So I want to bring it up here. One of the questions in the chat is, what is the risk of holding your Bitcoin in a Bitcoin IRA where you don't manage the private keys, given the latest McNulty case?
Well, under McNulty, if you're holding your Bitcoin in a Bitcoin IRA where all the private keys are held by the IRA custodian, I mean, you're safe, right? Under the McNulty rationale, you're in a pretty solid IRA because you don't have any control over the underlying assets. So you'd be in a situation where, I mean, you're at least as compliant as any legacy financial system IRA. However, the risk there is not the tax issues created by McNulty. It's all the risks that, Comm'r, you talked about when we started this presentation of not having control over your own keys.
Yep, absolutely. There's a lot of good content on our YouTube channel in regards to the importance of holding your own keys. One thing I would just add to that, we have seen, there are Bitcoin IRA providers out there that we have seen exchange hacks happen to, and individuals who are holding their Bitcoin in an IRA have had it seems to be ongoing, but there has been an exchange hack in regards to Bitcoin IRA providers as well. So it's not something that is exclusive to just broader exchange hacks. These Bitcoin IRA providers are susceptible to it as well. And all of this goes back to the importance of holding your own keys, being a sovereign individual, self-custodying your Bitcoin, and taking advantage of this unbelievable new asset that allows us to do this in a way that we never could before. And Unchained Capital fits really nicely in that solution because a lot of people aren't comfortable going through that process on their own. And that's where Unchained Capital, we have a concierge onboarding service that you can sign up for where we will walk you through how to actually hold your own keys. So with that, maybe we can, in terms of time, let's jump back into the conversation. I want to make sure we walk through the Bitcoin IRA component of this, talk through checkbook IRAs, and then we'll open up some time at the end for further questions. So Jeff, I'll pass it back to you, and maybe now we can jump back into the McNulty case, why everyone's freaking out about it, and what does this have to do with Bitcoin IRAs?
Sounds good. So, as I said here, the reasoning was very wrong. And there's just before I jump in here, there's one other point I want to make that I inadvertently left out before we jump to the Q&A. One other thing that was very odd about the opinion itself, which we're going to come back to in a little bit, is when the court was discussing the duties of an IRA custodian, it relied on a statute that isn't applicable to or a regulation, I should say, that isn't applicable to taxpayers at all. It's 1.408-E, -2E. It's quite a mouthful. That is a regulation that's applicable to licensing requirements for certain custodians who are not regulated by a state department of banking, which wasn't even the case in terms of the custodian in the McNulty case. So it's very bizarre. And further, all of those requirements under the regulation itself are waived in the event that the custodian is acting in a passive manner, which essentially, as we've discussed throughout this presentation, all modern IRA custodians do act in a passive manner. So very odd. That raises the question, if the reasoning is wrong, should we just ignore the case? Well, the risk there is that the IRS for years has been interested in attacking checkbook IRAs. as I talked about earlier, it's always failed in court, and we thought we were in the clear as a result. Despite being poorly decided, McNulty could breathe new life into IRS enforcement efforts. So if there's a way to comply with the McNulty rationale, which doesn't compromise key control, I believe that's worth the trade-off. So the key to this is to structure the IRA such that if it were held violative of the McNulty rationale, so would every discount broker IRA. And what I mean by that is we're in this very bizarre situation where no one can comply with the literal plain language of the McNulty case, because if the plain language of the case were correct, every IRA would be disqualified. So what we have to do instead is comply with the rationale in such a way that, our Bitcoin IRAs, disqualifying our Bitcoin IRAs would necessarily disqualify all legacy financial system IRAs, because there's no way that the court intended that.
Right. And I think, that actually, before moving on, that it's a great segue into the next slide. But one of the main questions we had was, we from PG, we know that IRA LLCs have been tested through case law, but has the Unchained Bitcoin IRA structure been tested? And I think this gets right into your point. How does the Unchained Bitcoin IRA structure fall within this broader context?
Yeah, I think, as we go on and we discuss that structure, how we would structure it, you'll see that, it is designed to mimic a legacy financial system IRA, which obviously has stood the test of time for, 20 plus years. Discount brokers have been offering, self-directed IRAs. So how would we structure this? The way we handle this is we title your Unchained Vault to a licensed IRA custodian, FBO, the account holder, exactly like a brokerage IRA. So if you have a TD Ameritrade IRA, your account is titled, TD Ameritrade Clearing or something like that for the benefit of John Doe. Ours are titled Solera National Bank for the benefit of John Doe. Solera National Bank is our licensed financial institution partner that acts as custodian of all these IRAs. So the custodian delegates control of the private keys, 2 to the client and 1 to Unchained. And as part of that delegation, both the client and Unchained specifically agree that they're acting as an agent of the IRA custodian in terms of how they use their keys. This was one of the key things pointed out by the court that was permissible. Now, holding your own keys, if you hold a quorum of them, 2 of the 3, this allows you to withdraw your coins at will, which obviously is something that would be very important to our clients to be allowed to do. But so does possession of a discount brokerage password, right? So we're not in any different, territory than a discount brokerage in this situation, because TD Ameritrade, if you log into your account and you make a withdrawal, like they don't say like, oh no, you can't do that because you didn't really need the money, or they don't approve those transactions at all. All they do is they monitor them so that they are all reported, and that's really the key. Constant monitoring and reporting akin to a legacy financial system brokerage. And that's what we're doing at Unchained.
Yeah, and within that McNulty case, what was the verdict from a monitoring and reporting standpoint? It seems like that's a pretty important component to all of this.
Yeah, and that's really key here. So the court went to great lengths to register its displeasure at the IRA custodian not monitoring Mrs. McNulty's LLC. So with a checkbook IRA, what happens is the IRA custodian specifically disclaims all responsibility to have to monitor the investment activities of the LLC. That's very different from the structure that we use here at Unchained, where the vaults are monitored on a constant basis, because we, as an agent of the IRA custodian, have access to both the public keys. While we do not have the private keys, we do have the public keys, as well as the wallet configuration file. So we're able to monitor all those transactions and make sure they're reported to the IRS appropriately. The court created this very strange definition of constructive receipt that ties into the monitoring here. So the reason this is so strange is constructive receipt is not a new or novel concept in tax law. It's very common. But under general tax law principles, if you have the right to have a third party pay you some amount on demand, you're considered to be in constructive receipt of that amount. Well, that can't possibly be what the court meant when it talked about constructive receipt in the context of an IRA. Because if that were the case, essentially every IRA in the legacy financial system would be in a situation where the IRA owner is in constructive receipt of its assets. So that cannot possibly be what the court intended to disqualify every current IRA. The point of this opinion was not to create a year zero, so to speak, with regard to retirement accounts. Instead, the court created this weird IRA-specific definition of constructive receipt that seemed to rely heavily upon the custodian's ability to view and properly report all transactions. And that's what we really focus on at Unchained to make sure we stay within the boundaries of the McNulty opinion rationale.
Got it. And I mean, yeah, just to jump right into the next slide, any additional kind of details you wanted to share on the McNulty case more broadly?
Yeah, I mean, just, it's just some other details about it's sort of this I say a novel version of constructive receipt because, as I said, in tax law, constructive receipt is a very old and well understood concept, but the way it's understood in general tax law cannot possibly be the way what the court meant in the context of the McNulty case. One of the reasons this case is so odd. So, their quote was, while an IRA owner may act as a conduit or agent of the IRA custodian, she may do so only so long as she is not in constructive or actual receipt of the IRA assets. So as I mentioned on the last slide, the Unchained Key Delegation Agreement is clear that the IRA owner controls its keys as an agent of the IRA custodian only. The custodian has access to the relevant public keys and wallet configurations such that it is aware of all actions taken by its agent. All of those actions are reported by to the IRS. So in this way, an Unchained IRA is no more open to tax abuse than any legacy financial system IRA that has been around for, a very, very, very long time.
And before we jump into the, how does the checkbook IRA compare to the Unchained IRA? How does it compare to legacy IRAs at a brokerage? One of the questions from Charles in the chat, which I think a lot of people are probably thinking of, is won't McNulty appeal?
That's a great question. So I think they may not, because on appeal, they would just lose on 408M. So as I talked about a few slides back, they lost on two separate independent grounds. 408A, which is all this weird trustee custodian stuff we've spent most of this presentation talking about, and 408M, which are at special requirements specific to gold. The court didn't have to address 408A at all. She still would have lost based on 408M grounds. So as a result, they may not appeal. What is more interesting to keep your eye on is whether the IRS issues, whether it be a revenue ruling or some other procedural document or notice to the public regarding how they intend to interpret this case going forward and apply it to other taxpayers. When the IRS does something like that doesn't necessarily have the force of law, but it does represent the IRS's position in terms of how it's going to carry out its enforcement. So typically you want to comply with that sort of stuff, because what they're effectively telling you when they issue one of these notices is, this is how we interpret the law. If you disagree with us and you take a contrary position and we audit you, you're going to have to sue us in tax court, right? So you would generally like to comply with that sort of guidance if you can, because most people do not want to end up going to tax court.
I think my biggest takeaway from this webinar personally is that I am very grateful that you are part of Unchained Capital's team with your wealth of knowledge here. So maybe we can finish up, if you don't mind, just taking a minute to walk through the checkbook IRA versus a legacy brokerage IRA. How does all of that fit in and compare to the Unchained IRA? And why do we feel that the Unchained IRA is in a separate conversation than what is going on here with the McNulty case?
Sounds good. So, the comparison here is very critical. So a modern brokerage IRA allows withdrawals at will. So that feature couldn't possibly be constructive receipt under the McNulty rationale. Otherwise, it would be implicating essentially every existing IRA right now. And we'd be at year zero with retirement accounts, which is the IRS is not going to take that position. Modern brokerage IRAs monitor all the accounts, however, for withdrawals and deposits, just like an Unchained IRA does. We do that exact same thing. If an Unchained IRA violates the McNulty principles of constructive receipt, again, as I've mentioned a few times, so does nearly every other IRA in existence. The whole way we tried to design this would be that, a tax law attack on a Unchained IRA would by necessity be a similar attack on a legacy financial system IRA.
And then in regards to the broader landscape,
regards to the broader landscape, there are checkbook style IRAs out there, and they will allow you to control your private keys. Those do risk an IRS attack based on constructive receipt due to the lack of custodian monitoring, because you theoretically could be in the same position as Mrs. McNulty. Not necessarily. I mean, you could make an argument that with respect to gold, there's no public blockchain ledger, right? So that Bitcoin is very different from gold on that point. As to whether that would matter, we just don't know. So in the interest of conservatism, you might want to sort of avoid, I guess I would say, getting involved in that situation. The other type of Bitcoin IRA out there would be a no key access IRA. So that's going to comply with McNulty, right? Because the custodian is holding all the private keys. You don't have any control over anything. But that drops us back into the whole not your keys, not your Bitcoin problem. And as Comm'r mentioned earlier, a major cryptocurrency IRA custodian had its Gemini account hacked recently, and it appears millions of dollars were lost. And those were not millions of dollars of custodian dollars, they were client dollars. So that is obviously not a situation you want to be in. If your IRA is tax compliant, but you end up losing the Bitcoin due to a hack, I mean, I don't know. That's a even worse situation, arguably. The Unchained IRA, we're trying to split the difference here and give you the best of both worlds.
Yeah, that's excellent, Jeff. And I think a great place to tie a bow on this McNulty discussion and open it up to questions. I really appreciate you walking through all of this. And I've seen a lot of comments in the chat, so I think everyone is really learning a lot from this discussion. For the last 10 minutes here, we'll jump into questions and Q&A. There's been so many questions being shot into the chat here. We will do our best to get to as many as we can. As a reminder, there's a lot of questions on the Unchained IRA. I will take one more plug to the IRA webinar. There are answers to a lot of the questions in the chat within that Unchained IRA webinar that Justine shared, and we'll share again before the end of this discussion. We will try and answer those questions as well, though, if we have time here. Related to the McNulty case, Jeff, I'll start with this one. This is from Reed. Do you have any opinions about if laws will be passed specific to Bitcoin retirement accounts in the future? I know that's a tough question to answer. It's all speculative. Important reminder to everyone on this call, we can't give any sort of tax advice. Would point you towards a tax advisor for professional guidance there. But any thoughts you have on kind of the future landscape of Bitcoin retirement accounts in the future? For example, how would retirement accounts be impacted by Bitcoin if it were to be defined as legal tender?
Yeah, so none of that would really impact Bitcoin if it was defined as legal tender. You're allowed to hold domestic and foreign currency in an IRA, so you'd be okay there. There have been some, congressional proposals around tightening up IRAs in terms of types of investments and things like that, but they've all been going after checkbook IRAs and also going after investments in private companies where the underlying account owner has some sort of control over that company. Because what they're worried about, what they're seeing is angel and venture capital investors will invest in a company, in a pre-seed round or a seed round, using their own IRA funds. So essentially, they're using their IRA funds to invest in their company, and they have the company sell them shares at like a very low price because they're able to do that. Again, because they have some level of control over that company. The IRS really doesn't like that. And they haven't been able to, under existing law, challenge it. So Congress has been going after that. So the primary focus right now has been on checkbook IRAs and then sort of these like private, let's say, I guess broadly, private equity type investments within IRAs where there's a level of control over the company. Control or majority ownership, or even not majority ownership. Some of the proposals set at the threshold at like 20 or 25% of the underlying company being invested in.
Excellent. Thank you, Jeff. I've seen this question come through a lot, so we want to make sure to answer it. There's a lot of questions in regards to former KeyKeeper IRA clients and what should they do if they're in this situation. I'll pass it over to you first, and then certainly happy to fill in any additional details.
Yeah, so Comm'r will fill in the details on exactly how we onboard those, since he's our client-facing guy here. But what I can tell you is, we have at Unchained developed a conversion process, or what we call internally a migration process, where you can convert your existing Solera National Bank checkbook IRA into an Unchained IRA. It doesn't require a rollover in the traditional sense, since we also use Solera National Bank as our IRA custodial partner. It's basically just a conversion of your existing IRA account. And it's a multi-step process, but our team here kind of guides you through it step by step to make it as easy for you as possible.
Yep, absolutely. Thank you, Jeff. And as additional color there, it's an optional process. If you are interested in potentially migrating your checkbook IRA or your KeyKeeper IRA into an Unchained IRA, certainly happy to help you with that process. Feel free to reach out to me at Comm'r@unchained.com, and we can set up some time to just talk through what that process looks like. And then Justine, once again, if you don't mind throwing up a link to my meeting link, you can certainly feel free to book time with me there. And I'm happy to talk through the Solera migration, the Unchained IRA, and even just our platform more broadly, if you're just interested in learning about personal custody and how private keys work. One of the other questions we got from Elon was, if Solera is the custodian of the IRA, what is the role of Unchained Capital? And I'm happy to take that one, Jeff. So ultimately, the Unchained IRA is really a one-of-a-kind product out in the space right now. We are offering you the ability to hold real Bitcoin in an IRA that you hold, that you get to control 2 of the 3 keys to. And importantly, it's all in one package. You're doing it all at the same place, and tax reporting as part of that IRA product is included. The reason that we can do that is because we have a direct relationship with Solera National Bank, who is providing the IRA account and the tax reporting component and helping you establish that IRA account. And then at Unchained Capital, we are leveraging our trading desk for the buying and selling of Bitcoin. And then we have our custody platform to allow you to hold those keys. So it's really only because at Unchained Capital, we offer the ability to manage the custody component and the purchase and sales component, and our partnership with Solera National Bank allows us to provide all of that in the same place. So that is the role and definition of Unchained Capital. We are offering the custody solution, and we are allowing you to make those purchases and sales so that when you're rolling over funds from another IRA or making an annual contribution, we can help you convert those dollars into Bitcoin. Outside of that, one last point I would like to make here, the IRA, once again, is one small part of what Unchained Capital offers as our platform. The benefit of the Unchained IRA has plenty of standalone value, but the really cool aspect is that once you're set up on Unchained Capital's platform, you have the ability to manage all of your Bitcoin wealth, once again, with the same 2 hardware devices and the same 2 seed phrases. So not only can you manage your Bitcoin IRA, your IRA funds at Unchained Capital, but you don't need to go anywhere else. You can manage all of your Bitcoin wealth in the same place and leverage our financial services. So wanted to take that one. One other question I got here, Jeff, and maybe it's a short answer, or maybe it's another discussion. Where do solo 401ks fall in all of this?
Yeah, so at Unchained, solo 401k is different from an IRA because in the case of an IRA, if you want to invest in, say, Bitcoin and stocks and bonds, you can have one IRA at Unchained for your Bitcoin. You can have one IRA at Fidelity for your stocks and bonds, and that's fine. That's typically not how it works with a solo 401k. You have one solo 401k plan. That solo 401k has an account at Unchained for its Bitcoin, and it has an account at, say Fidelity for its stock and bond assets. So we are able to accommodate solo 401ks in a different way than we would handle an IRA. Basically, if you have a solo 401k plan document provider, of which there are many out there, that provide you with constant updates to your 401k plan docs, such that you're always in compliance. And you have an EIN for your 401k plan, which you typically would have. We can open an Unchained vault for you, or an Unchained account more broadly, under the name and tax ID number of that 401k plan itself for your 401k Bitcoin. You could also, if you're not on zero yet, separately using that same plan, open up a, let's say a Fidelity account if you wanted to also have stocks and bond assets within that 401k. So you're not stuck into, being 100% in Bitcoin if you're not quite ready for that yet. And if you have a solo 401k and you're interested in going in that direction, or you need any other guidance, we're not tax advisors, of course, but you can still reach out to Comm'r. He'll point you in some directions in terms of where to go there. And if it's a situation where you do need to bring in a tax advisor, he'll be sure to let you know.
Excellent. Well, it looks like we're coming up right on time. Jeff, thank you so much again for giving us some of your time today. And most importantly, thank you to everyone in the audience for joining us. Once again, these webinars will be happening on a monthly basis. And Jeff and I and the team here are going to be consistently trying to provide you with education on all things Bitcoin, retirement, and inheritance. Just as a reminder, this session was recorded. It'll be available on our YouTube channel here early next week. If you missed any part of the session, certainly make sure to check out the replay, and there will be additional information there. Most importantly here, there's a lot of questions in the chat that weren't answered. We obviously want to make sure to answer all those questions. So don't hesitate to reach out to me at Comm'r@unchained.com. You can set up time to speak with me or the broader team here. We definitely want to make sure to get all of your questions answered, and I'd be happy to speak with each and every one of you. With that, I will wrap things up here. Jeff, thanks again for your time. Thank you everyone for joining, and hope you can join the next one when we host our third installment of the Retirement and Inheritance webinar series.